Hello, hello. Jan from Berkshire Hathaway Home Services, the Loft Warehouse, back for another market update. So today we are going to talk about the trouble in the banking industry, interest rates, and a general overview of market conditions. If you've been following news about the banking sector, there have been some banks that have folded and have been taken over by the FDIC in recent weeks, and some others that have been shored up by other banks to keep them afloat. Don't panic. Real estate is a solid investment, and here's why. So real estate usually remains stable even during recessions. I've shown you this graph before, and you can see here over the last many recessions that we've had in the United States, the only recession that has had a significant decrease in home values is the Great Recession, which was caused by the mortgage industry. Feels like something like that is likely to happen again because it was so painful and so recent. But really, mortgages are very hard to get these days. And as you can see from some previous recessions, the real estate values actually went up. And that was because when the stock market crashes, people take their money and put it into stable assets, aka real estate. So now I want to show you a graph of the last 365 days of the Dow Jones. So look at all of this volatility. Could you imagine if your real estate value looked like this? I would have heart palpitations. Real estate is way more stable, way more steady. Market values don't change from hour to hour, and this makes it a much less anxiety-inducing investment for you and I to make. This turbulence in the market is having some downward pressure on rates, pushing them from where they were hovering around the sevens down to the mid sixes. And this graph will just show you where rates have come from since the beginning of 2023. Everyone was waiting to see if the Fed was going to raise rates at their announcement for March's rate meeting. And hot off the presses, I am recording this on the 22nd, which was the day that the Fed met. As I press the record button, the Fed has just announced that they are going to raise their rates 0.25% or 25 basis points. Just a few minutes before I started recording, this news came out. So rates will continue to stay higher than we have seen in quite a while because inflation is still not under control. We are still seeing in certain submarkets competition and multiple offers due to low inventory. Properties that are well maintained, very cute and staged, tend to attract the most attention. Interest rates are fleeting, even if it takes a year for inflation to get back under control. Rates will go back down at some point. I mean, we would all be grateful at this point for a 4.5% or 5% interest rate. The real challenge that we're having right now is low inventory. And we are still definitely seeing in certain submarkets competition and multiple offers for these properties because we just don't have enough for all of the buyers that want to buy right now. So interest rates, again, that'll change in the near future, but we cannot obtain the amount of inventory that we need, that we are underbuilt to create a balanced market in a year. We used to build 25 million homes every decade since the 70s, but we stopped that after the Great Recession because our inventory levels shot up in the local Michigan market. It was 18 months of inventory. So here's a graph kind of explaining how we are currently underbuilt. You know, we have caught up on a year basis to what we were building, but we certainly have not made up for the shortage that we created during the last housing crisis. So this is why, even though interest rates are at 6.5% today, we are still seeing competition for home. And really, how much does the higher rate really change a payment? So here's an example of a $500,000 home. Now going from 7% to 6.5% changes the payment $166 per month. And yes, I understand that it's going to take some people out of the affordability of a specific property. They're going to have to go into a lower home value. Now I want to show you the history of the median rental rate since the 80s, when they were an average of $300 a month. Oh, that'd be so nice. Rents, as you can tell, have not gone down. It's been a continuous increase in an upward direction since then. And even during the Great Recession, we barely saw a change in the downward direction. If you look close, there's a tiny little area where rental rates went down a little bit, but overall, they are continuing to go up and up. So buying a home is going to freeze your payment, add some stability to your life so you can count on your monthly expenses, and offer all sorts of other things. So those are the hot minutes for today. Thank you so much for watching. If you get value out of my videos, please shoot me a message and let me know if there's something that you would like me to touch on for the next market update that I give. Thanks so much for watching. I hope you have a great day.